Hey guys, welcome back. So, conventional wisdom is that index funds have now been proven to outperform actively managed funds over the long term, and they are the smart way to invest. Just invest into a core index fund or ETF every single month, come back in 30 years, and you will be very happy. However, enter Cathie Wood. Cathie Wood is one of the top actively managed fund managers in the world right now, and she is crushing the performance of the S&P 500. And she is giving a stark warning to all passive investors, saying they are going to get caught into a value trap. She says ever since the year 2000 tech bubble, the world has now changed and it's a mistake to just invest into passive funds. I do personally think it's always good to keep an open mind and consider all the opinions and research, so I have got a great video for you guys. First up, we'll be covering the full ARK Invest portfolio for 2021. I'll show you how much money Cathie Woods is making and also her net worth. And then we'll do some quick performance analysis on the ETFs to try to answer which one of the ARK Invest ETFs is best. As always, if you do find anything useful in the video, be sure to drop a like. Only takes 2 seconds and would be very much appreciated. Okay, sit back and relax guys. Here is the full ARK Invest portfolio for 2021. Okay, so here is what we've got coming up. We're first going to jump straight in and take a look at the ARK Invest portfolio for 2021. We'll then do some stats on Cathie Woods so I can show you how much money she's making and also her current estimated net worth. I've then done some quick performance analysis on the ETFs so we can try to answer the question which ARK Invest ETF is the best one. And then I'll finish with a bit of a bonus for you guys. I've got a quick clip from Cathie Woods explaining her warning to all passive investors. ARK Innovation ETFs are for investors who are passionate about the future, believing that innovation is the key to growth. So here it is. We have 7 ARK Invest ETFs. This doesn't include the space one, as the space one is just about to launch. And this is sorted by assets under management. So this is going to show you where investors have chosen to put their money. And 51% of all investor money is just in the flagship ARK Innovation. We have 22% into the genomic revolution, 15% in the next generation internet, 6% in the fintech innovation, 5% in the autonomous tech and robotics, and you'll notice that these are the actively managed ETFs. The last 2 are the passively managed ones. And you can see there's barely any investor money in the 3D printing or the Israel innovation technology. So pretty much most of the money is actually only in this top 3. The flagship ARK Innovation, Genomics, and next generation internet, and everything else is squashed into this bottom 11%. And this information was taken from the main website and it's up to date as from the beginning of 2021. And the assets under management in total is around $35 billion. So this is Cathie Wood. And the assets under management we said was $35 billion. Now the fee across the board is 0.75%. So we can work this out and the company is generating a revenue from the fees of $262 million. Pretty good. And her net worth is around about 350 million, according to Forbes. And how we worked this out, it was 2% of the assets under management, and then Cathie Wood has a 50% share. So this is what a hotshot, actively managed fund manager looks like right now. We're all about finding the next big thing. Those hewing to the benchmarks, which are backward looking, are not about the future. They are about what has worked. We're all about what is going to work. So let's take a look at some performance data on the ETFs. First up, we're going to start with the benchmark, and it's our good old trusted S&P 500. This represents America, as one of the easiest and simplest things an investor can do is just invest into an S&P 500 index fund and The 5-year performance is 95%, which is actually really good and high for the S&P's average. So just bear this in mind. So unfortunately, we don't have really long-term performance on these funds. We don't have the 20-year or 10-year, so 5-year is the longest we can get, but they are very impressive. So the S&P 500, our benchmark here, 5-year is 95%. Top of the list is the next generation internet, ARKW, and you can see 742%. This is 7 times the performance of the S&P. We then have the flagship, ARK Innovation, 6 times over the S&P. Genomic Revolution, 4.5 times over the S&P. Autonomous Tech, 387. 3D Printing, 112%. And then we don't have 5-year for FINTECH or Israel at this point. And what you'll notice is that the 3 biggest funds when it came to assets under management, which I showed you earlier, is actually these 3 funds. So investors have been absolutely right to invest in these, and this 5-year performance is excellent. And I don't think that these funds can be ignored. And I also looked at year-to-date performance as well, so we can see which ones have had the very best start to 2021 so far. And it's actually the flip. So S&P 500, all of these are accurate as of the time of the recording, but it's the 3D printing that shot out at the gates at 35%. We have autonomous tech at 16. In fact, these two should be the other way around. So it's FinTech innovation at 17%, autonomous tech at 16, then Israel, next generation, and it's the 3 big funds that are actually at the bottom of the table. But having said that, the Genomic is still following the S&P 500 at 5%. The flagship fund is still double the S&P. And the next generation internet is still triple the S&P. And these are at the bottom of the table. So you have to say, these ARK Invest funds' performance is very impressive. Investment firms that are not set up appropriately to analyze and research and invest in disruptive innovation are going to deprive investors of some of the biggest opportunities of our lifetimes. And as promised, I have a bonus clip from Cathie Wood explaining her warning to all passive investors.
The financial markets have lost the plot. What we've seen since the tech and telecom bubble and bust, and then the 08-09 meltdown, is tremendous risk aversion, fear, and it's manifested in portfolios going passive. There's been a movement towards passive and index-based investing, and that's because portfolio managers and analysts believe that that is the safe thing to do. That's what they're measured against, are these benchmarks. Well, benchmarks are very backward looking. The stocks in benchmarks are there because of what has happened historically. Innovation is all about the future. So there's a dearth of innovation and truly innovative stocks in traditional benchmarks. But our business has gone passive. And at the same time, we've seen the largest asset managers, the Fidelities, the T. Rowe's, they have been looking, starting about 6-7 years ago, for innovation in the pre-IPO space. So what's happened is a void has developed in the public asset management world, and that is a void we're seeking to fill. This is a timeline to give you a sense of what we are about to experience, what we are experiencing. I mentioned the 50 years to 1929, telephone, automobile, electricity. You can see the internet. We thought the internet was an incredible transformation in our lives, and in many ways it was. But look at what, and we've done a study, fairly rigorous, based on academic research, you can find on our site. Look at what the change we are about to experience is going to do. If you liken this to a Richter scale and earthquakes, You'd compare the early 20s, late 1800s, early 20s, maybe to a 6-point earthquake on the Richter scale. Today, I think we're looking at something 7 or 8, and each point increase is 10 times the amplitude and 30 times the power when you're talking about earthquakes. We believe that the transformation we are facing is going to be quite provocative, and we believe that investors are not prepared for it. In fact, those who have invested in benchmarks, we believe, are investing in value traps because of the transformation that the companies involved with these technologies are going to cause.
So there you are, guys. That was the full ARK Invest portfolio for 2021. Cathie Wood is one of the top performing actively managed fund managers right now. She's crushing the performance of the S&P 500, and she is giving a stark warning to all passive investors. She mentions that passive investors are going to get caught in a value trap. The problem is that passive investing is backward looking, and because we've now got more change happening than any time in history, we should be looking forward instead. So what's my opinion? Should we be selling out of all of our index funds and into the ARK Invest ETFs? Well, for me, it comes down to where you sit on the risk curve. Further down the curve being higher risk with potential higher reward, it does depend on your personal risk tolerance, your age, your investing knowledge, and how much money you actually have to invest. You could allocate 10% into actively managed funds, you could go 50%, or you could go all in 100%. History does show, though, that index funds do outperform over the long term, but I don't think these returns can be ignored. So ultimately, you must decide what is right for you. Okay, so there you are, guys. Hope you found this useful. In fact, just one favor to ask. If you did find anything useful in the video, be sure to drop a like. That would be very much appreciated. If you haven't yet subscribed to the channel, I invite you to click below and join us. I do have some great videos coming up that you don't want to miss. Okay, cheers, guys. Thanks for watching, and I'll see you in the next video. Bye for now.